Introduction. Why should you care about your stocks? Investing in the stock market can be exciting. It's like a game where you can grow your money over time. But just like any game, you need to keep track of how you're doing. That's where evaluating stock performance comes in. Think of it like checking the score of your favorite sports team. You want to know if they're winning or losing, right? The same goes for your stocks. You need to know if they're going up in value or down. Evaluating your stock performance helps you make smart decisions about your money. It tells you what's working well and what needs to change. By paying attention to your investments, you can set yourself up for a brighter financial future. Keeping score. How to track your stock's performance. Tracking your stock performance is easier than you might think. You don't need to be a math whiz or spend hours crunching numbers. Many simple ways to keep tabs on your investments exist. One common method is to check your brokerage account regularly. Most online brokers provide tools and charts that show your stock's performance over time. You can see how much the price has gone up or down and calculate your overall gains or losses. Another helpful technique is to set up alerts or notifications. These can be sent to your phone or email, letting you know when a stock reaches a certain price or experiences a significant change. The benchmark game. Comparing your stocks to the pros. When evaluating your stock performance, it's essential to have a point of comparison. That's where benchmarks come in. A benchmark is like a measuring stick that helps you see how your stocks are performing compared to the broader market or a specific industry. One widely used benchmark is the S&P 500, which tracks the performance of 500 large companies listed on stock exchanges in the United States. By comparing your stock's returns to the S&P 500, you can get a sense of whether it's outperforming or underperforming the market. Remember that not all benchmarks are created equal. It's essential to choose a benchmark relevant to your investment strategy and the specific stocks you own. Section 4. Portfolio Checkup. Reviewing and adjusting your investments. Just like you go for regular health checkups, it's crucial to review and adjust your investment portfolio periodically. This involves taking a step back and assessing your investment goals, risk tolerance, and overall market conditions. During a portfolio review, you might consider rebalancing your asset allocation, which refers to how your money is divided among different asset classes, such as stocks, bonds, and cash. You might also sell underperforming stocks and invest in more promising opportunities. The frequency of your portfolio reviews depends on your individual circumstances and risk appetite. However, it's generally a good idea to review your portfolio at least once a year or whenever there are significant changes in your financial situation or investment goals. Section 5. Tools of the trade resources for monitoring your stocks. In today's digital age, a wealth of tools and resources are available to help you monitor your stock performance effectively. These tools can simplify tracking, analyzing, and making informed decisions about your investments. Financial websites and apps like Yahoo Finance, Google Finance, and Bloomberg provide real-time stock quotes, charts, news, and analysis. You can create watch lists to track your favorite stocks and set up alerts to stay informed about price movements or company-specific events. Investment research platforms like Morningstar and Value Line offer in-depth reports, ratings, and analysis from industry experts. These platforms can help you research specific companies, understand their financial health, and make more informed investment choices. Section 6. The Power of Learning. Becoming a savvy investor. The world of investing constantly evolves, so continuous learning is crucial to becoming a savvy investor. The more you know about financial markets, investment strategies, and economic trends, the better equipped you'll be to make sound investment decisions. Numerous resources are available to enhance your investment knowledge, including books, articles, podcasts, and online courses. Don't be afraid to ask questions, seek guidance from financial advisors, and engage in discussions with fellow investors. Remember that investing is a journey, not a destination. There will be ups and downs along the way, but by staying informed, staying disciplined, and continuously learning, you can navigate the market with confidence and work toward achieving your financial goals. Section 7. Conclusion. Your journey to financial freedom starts now. Evaluating stock performance is an essential aspect of successful investing. By tracking your investments, comparing them to benchmarks, and regularly reviewing your portfolio, you can make informed decisions that align with your financial goals. Don't let the world of investing intimidate you. With the right tools, resources, and a commitment to continuous learning, you can confidently navigate the market and work toward achieving your financial aspirations. Remember, investing is a marathon, not a sprint. Start small, stay informed, and enjoy the journey to financial freedom.